Hi all, hope you're well. Cullen here and welcome to Lawyer Lending Live. My next guest has had almost 20 years in property and as I said in the promo, is a true savant in the space. Co-founder of Wealthi, which is making headwind all over Australia. Please make very welcome my dear friend of many years, Mr. Dom Nesci. How are you, sir?
Good, mate. It's a beautiful sunny day today. So that's one thing to lift the spirits. And
It is indeed.
appreciate the very kind, warm, generous way that you introduced me. A property savant. I'll take that. I'm going to put that in
Mate,
my LinkedIn
please.
bio.
Mate, it's not lying if it's true, mon ami, and you certainly are one. Before we get into it, I want to encourage everyone that it is live. It is 11:33 a.m. in Sydney Standard Time today. So please, if you've got some questions for Dom, put them in the comments, and we will get back to you ASAP in the actual chat. But let's ask the question on everyone's minds, Dom. What is happening in your circle of influence, mon ami?
What is happening in my circle of influence? The interesting thing for me is because I work in real estate, it's a passion project of mine. A lot of the people that I then work with are in real estate or finance, are keen investors. So around me, there's a lot of talk about whether we should be investing in the market or not. And the truth is that my business partner recently bought a property. My other partner bought a property. I've been hunting for real estate for a little while now. I think that, we've seen the break in the property market that we were waiting for. Sydney copped it the most. I think Australia-wide, it's been about a 5% decline. But in that, there's many markets. Some areas haven't really declined at all. In fact, they've kept growing. But Sydney, premium part of the market, there's some really good value. But all of that aside, I still think that, we might still a little bit more pain is still yet to come.
Interesting. Well, that is leads very well into my next question. The media is putting doom and gloom as always, and people are waiting for the right time to buy again. Is it too late? Is it too late for someone to enter the market with the rates doing what they're doing and just going one way up?
I wouldn't, even though I just said that there might be more pain to come, I need to preface that with do not sit on the fence and do not wait. I think that the really critical thing to do is be clear on what your strategy is, what you're trying to achieve through buying real estate, be it your own home or an investment. And once you've got your criteria clear, go out and get it. You'd expect a property person to say that, but I haven't said that all the time. When the market's climbing or when there's been too much heat, I've been one of the first people to say, listen, hold off, don't go into those markets. But I do think that if you're clear on your criteria and you find the right piece of real estate that meets your needs, just jump in. You have to get in. Now, whether or not you save $30,000, $50,000, it's not going to change your life when you're holding this investment or this home for 10, 15, 20 years. That 50K is just inconsequential compared to the 500 million, $2 million that you're going to make. And for all your homeowners out there, if you find a home that, it grabs your heart, it meets all your requirements, just go for it. Don't sit on the fence. Don't try and get an extra 5K out of that property. Just get the thing, feel satisfied, and close the deal.
No, I love that. I love that. And what are your thoughts for people looking to make the change who are hesitant? I don't want to sell at a loss, but they have to remember that they're also buying a potential place for that vendor from at a loss. What are your thoughts for people looking to upgrade or make a change?
Well, people are selling for a reason. And, if you're just selling to take profits, maybe it's not the right time to sell. Maybe hold off. If you've got enough income coming in and you can service the debt, maybe wait a little while, make some small improvements if you can. But if you're selling because you need to sell, then sell. I've just sold a bunch of assets because I want to buy some other ones, and you're trading in the same market. I wouldn't try and sell and then wait for a crash to come to buy at the bottom. You don't day trade properties. I think that if you've got a buyer at the table, there are less and less buyers out there. Demand has certainly come off quite a lot as a result of interest rates. And in fact, I'd say that now is probably a good time, if you need to sell now, because we're at historical level or low levels of supply. We're coming into the spring selling season. After the school holidays, you're supposed to see about 30-40% more stock come into the property market generally. The spring selling season, it's warm, people are going to open houses. What we've found is there's actually been about 30% less than what there should be as a 5-year historical average. So if you're looking to sell, get it on the market, because there's a lot less competition out there, and we may yet see a flood of property coming. If I'm selling, I'd rather there be less competition, because then I'm one of few rather than one of many. And sell if you need to.
Sell if you need to. I love that. And you use the term in our conversations, Dom, of deploy. Time to deploy. What do you mean by time to deploy the cash, time to deploy what you've got ready to go?
Deploy your resources. There are a lot of people that sit on the fence. First home buyers have come out of the market. Investors have slowed down. When I say deploy, I mean, use the resources you have around you to just take massive action and go after what you want. Now is the time to do that. There is a lot of uncertainty. And if you're picking up a property at a 5-10% discount, that's really good buying. And even if you're not picking up a property at a discount, and it, again, meets all your criteria, the cash flow requirements are there, or you've got the yard that you want, or maybe you're doing a small development and meets all of your zoning requirements, go for it. I wouldn't be sitting and waiting and, buts, maybes, just act. I think it's a better way to be.
Love that. And in terms of what you're seeing in the market, what is hot and what's not right now in your research?
What is hot and what is not? What we've seen, and this is, when I say what we've seen, I'm referring to CoreLogic data. So for all of you wannabe property nerds or people that are out there that love real estate and want to get a good sense of what's happening, every single month I go into CoreLogic and I download their monthly chart pack. And what you can also do, if you don't want to sit there and read a whole chart pack, which is pretty easy to read and it's very upfront about what the data is, Tim Lawless, I believe, actually has a 10 or 15 minute segment he does every single month. And that's excellent. So you go to CoreLogic, they've got their own site on YouTube. There's a lot of really good data there. There's plenty of other data feeds out there, but I do like CoreLogic. Nonetheless, what markets do I think are hot and not? We've seen that the top end of the market, so the market's broken up into 3 key categories. There's the bottom, middle, and top. And the top part of the market, the most expensive part, is performing the worst. And you'd expect that. It's basically where they're getting the most amount of debt, and then interest rates have the biggest impact. So we're seeing the prices come off, and in some markets, particularly in Sydney, that part come off nearly 15% compared to the rest of Australia, which is on average about 5% decline. Now, the middle part of the market has declined a little bit less than that, but the most resilient part of the market has been affordability. We predicted that this would be the case. And the reason being is, as a borrower, and Cullen, you know this better than most, when you're applying for your loan now, your serviceability has come back as a result of the higher interest rates.
It has.
So we're seeing people that were spending $1 million coming down to like $800,000. The other part of the market that's really interesting to me is investments. And why I say investments, obviously I run an investment company, but we predicted that we would see sharp increases in rental rates, and we've seen that. Because there's less heat in the buying market, people are now either spending less money on property, on affordability, or two, not buying real estate, and that puts more pressure on the rental system. Now, there's another couple of streams that are coming in that are impacting the rental market. One is tourism. Tourism's coming back into Australia. Short-term letting means they're sucking up apartments and homes from the open market. Two, students are starting to come back. We saw that the federal government is incentivizing more students to come in, and also migration is starting to come back in a very serious way. Just the other day, there was a report that the federal government wants to spend about $40 million to advance about 900,000 applications that are sitting, migrants waiting to become permanent residents, into the country. And they've also got plans for allowing students to work full-time. Plus, if they get if they graduate from a diploma, not a diploma, when they graduate from just a normal degree and then a master's, it's extending the amount of time they can spend in Australia. So the last part is that they're also increasing the cap on the amount of migrants that can come into Australia. So all of this paints a picture that there's a huge amount of people coming into the country, taking up a lot of the available rental properties on the market. And some parts of Australia, we're seeing rental increases up to 37%. That's been in Melbourne, specifically around the CBDs. So parts of the market that I think are hot, I think now is a really good time to be looking for affordable rental opportunities and build that passive income that a lot of us dream of, right?
Absolutely. And that's what funds the lifestyle, right? It's not the job, it's the investments that you make.
Well, it gives you a lot of freedom. You know, when you know that your investments are being covered and you're making a little bit of money every month, it frees up a lot of that mental capacity and that heartache around, should I start a business? Should I, negotiate harder for my promotion? Should I take a bit of time off and do something that makes me feel happy?
On that note of investments, I think it's a really nice segue there, Dom. What advice would you give to your younger self about property and investment? If you were to go back in time at a certain age, what advice would you give yourself?
I'm feeling a little nostalgic because I sold 3 investments recently, and one of them was the first property that I bought. So younger, wow. 22-year-old Dom. The message that I'd give him is believe that you can do more with what you've got. And, what I've found is the only thing that's really stopped me is a limiting belief that I've imposed on myself. And when you're investing, you're often stepping into an arena where you're getting a lot of debt, you're spending more money than you've ever spent. So it's terrifying. Correct. And without proper guidance, you're more often than not going to take a half step or a step less than what you should. And what I found that is when I backed myself and when I believed that I can achieve what I needed to, it meant that I could be brave, take bigger, more ambitious steps. And I've always been able to shoulder that weight, take on that burden, and do more. So the first investment, I was very nervous, very mild. And the second, I did a little bit more. But in each of those instances, I probably could have taken a bigger step.
Well, we can't edit the expletive. This is a live, so I love that. Please come in with your questions. It's not very often we get this man and his wisdom on the socials. We're streaming live on LinkedIn, YouTube, Facebook. Please come in. We'll welcome them. I'm in finance, as you know, Dom. Rates are going up. Is that a bad thing for property, or is it just a natural part of the cycle?
We're coming off really, really, really low rates, and now they're really low. I think that it's a natural part of our economic cycle. A lot of people are going to have different thoughts about should RBA increase rates by 0.25, 0.5, 0.75, whatever. But I think it's just an ebb and flow of our economy, and I believe it's actually a good thing. It's taken a lot of pressure off the market. I feel like it was running very hot for a long time. It's taken a lot of the greed and frivolous nature from real estate. I felt for a long time people were overextending themselves into properties that weren't going to serve them in the long term, and we may see some of that pain. But in saying that, I don't think we're going to see as much pain as people predict. some of the most recent data that I've read is that there are no distressed sales, really. Very, very little. There's very little pain in the mortgage market, not much stress out there. And part of that is because Australians have saved more than they ever have. During that COVID lull, people got about a year ahead of their mortgages. So there's a lot of cash still in the system. I think interest rates are what they are. They're going to go up and down, and you've got to play your own game and not focus so much on what the RBA plans to do with rates.
Agreed. Do you think what they've been doing, going in hard and now tapering off with the 25 basis point rate rise in October, do you think that's a smart thing, heading towards 3.5 potential in December?
Yeah, I think it's fine. I think it's, there's a lot smarter people than me. I'm a little blip on the radar. I think that what they did makes sense because there are wider economic influences and things that are wider economic forces on the Australian economy than just, say, property prices or, inflation or, there are so many other things that are happening. So I think it was prudent that they went 0.25 rather than another 5.5. Okay. And I think it's good that we wait and see what happens next because there's just so many other things that are happening out there. What I do have to say is we live in a very good country, stable political system, excellent education. Our weather is relatively good despite the rain. Great healthcare. It's a really good, robust economy. We've got natural resources at our disposal. Australia's been growing for nearly 28 years or something, and it's really is the envy of the world in many instances. So, I've got a little bit of trust in what these grey hairs are doing at the top of our economy.
One of my legal partners, Dom, and I'd love to get some insights on this. Very shrewd in his investments, and he has a theory about the RBA in terms of there's only 3 million people who actually own property and have a mortgage. So with the rates going up, doesn't necessarily curb inflation like they say, or when the economy does recover, is it going to be more global factors? I'd love to get your thoughts on that.
So raising interest rates doesn't curb inflation as much. I think it does have an impact. It certainly does have an impact. It doesn't have as much an impact in some other countries. In America, they've got a different financial system where they had individuals that could lock in rates for 30-year terms.
Yes.
In Australia, you can lock in your rate for maybe 5 years, some maybe 10, but that's very rare. But 5 years kind of is maybe normal. So increasing interest rates, even though it's maybe 3 million people, I don't know if that's correct, but even if it is only 3 million people, that has a significant impact on households. And you only need to move the needle a little bit for a portion of the population, which is maybe more confident with their spending, that it has a big impact. Because when you impact people's costs of debt, a portion of the market's also, rent their investments. So they then increase their the rents on the other portion of the market. So there are much wider implications to rising interest rates than just people that are homeowners.
Makes sense. And in terms of Australia being the lucky country, there's a lot of obviously immigrant activity, and you're having great success with one portion of the market, the Latin Australian community. I'd love to talk on that. How did that grow, and what are you doing to help nurture that?
Well, we're working with a lot of Latinos that are coming out of South America and coming into Australia. But it's part of a much wider conversation around helping migrants establish themselves in Australia.
Yes.
My grandparents and my mum and dad migrated into Australia, in the 70s. And we're helping people that have sacrificed a lot to get here. Highly educated, save a lot of money, navigating our political system to go and get their visas and stuff organized. And very intelligent, hardworking class that are trying to come in, make good, do something better than what they could back home. So I look at this generation of people coming into our country that want to add to what we have and see value in our soil. And I want to help them because I remember the stories that my parents told me, how hard it was for them to start, not being able to speak the language properly, being able to navigate, Australian tax law, organizing finance, how to coordinate the property, how to get properties managed. It's very difficult. And we've just got a lot of cut through in that market because people see our integrity and our honesty. We show them the data and we walk them every single step of the way. So it's been really hand to mouth, one person telling another person, and that's just led to a tsunami of growth. So I'm very happy. Wealthi's doing great. And I'm looking forward to meeting and helping many, many more people because it's one of the best feelings in the world.
That's fantastic there, Dom. And you've actually got 2 ongoing podcasts right now, I believe. One in English and one in Spanish.
Correct. So we have an English podcast. We have the Espanol podcast. We also have the Wealthi Academy in English and in Spanish. We give away all of our information, data, how to buy real estate for free. We don't charge people for that. And we also run the Wealthi research. So we grab all the current market data. We put our commentary over the top of that. And we also, I'm, trying to move to the new age. I do my own TikTok lives where people can come and have a chat to me, ask me questions about the market. And every Friday at 12 o'clock, I'm open to the public to just talk real estate.
And how do you find the engagement on TikTok? Is it a great platform for people to come out and ask these questions?
Yeah, I feel like it is because it's a little bit more anonymous.
Yes.
And people just feel a bit braver to ask silly questions. And I like being able to do that. Yeah, it's a safe space. LinkedIn's great. You kind of own who you are in LinkedIn because it's your presence. TikTok's a little bit more anonymous, which I can just ask, a question from a friend,
Yeah, correct. No, I think that's really good. And I think what you're doing is fantastic. You're not only a property savant, but a media savant as well. So well done, mate.
Thanks, mate. And I've got a book coming out soon. So
tell us more about this, because this has been an exciting journey for you, not only being a new father, the little Leo, but writing a book.
Yeah. So that's coming out in April next year. It's contentious title. It's called You Won't Fuck It Up. Buying property is easier than you think. And it's for people that are interested in just buying real estate, whether it's your own home or an investment. I tell a lot of personal anecdotes, stories, all the different types of real estate you should be looking at, pros and cons of different types of properties, regional versus city, how you can structure different things. I talk about different strategies, why choose your own home versus an investment, and vice versa. I've tried to be very candid in my conversation, not too an analytical or mathematical, like not too much dense maths, graphs, and data. I just want to make it simple, easy to read, pick up, get value, and then run.
So the audience is for anyone looking to buy or take their property game to the next level, would you say, Dom?
Yeah, anyone that wants to buy any real estate, residential primarily. The commercial real estate book will probably come out, a year or two after that.
So this that's book number 2 or 3, my friend. You are you're an inspiration. The fact that this is coming out, it's unmanifest, manifest, and I look to see it do very well. And I congratulate and tick my hat off to you if I wore one, mon ami.
Mate, thank you very much. I appreciate you setting this up. It's great jumping on live, having these conversations. You are doing so much for your community of people. It's great to see that you're bringing lawyers together, having candid conversations. And I love all the work that you do. You're a mountain of knowledge, and I really appreciate you bringing me onto your show. So thank you.
It's an absolute pleasure, Dom. And what's one thing you'd like people to walk away with today?
One thing that I'd like people to walk away with today. Be present. Enjoy the moment. Don't get stuck in the past, cause anxiety. Don't project yourself too far in the future. And that future anxiety, past is depression. just be present, enjoy the day for what it is, work in what the things that you can control, and don't sweat the small stuff.
And it's all small stuff.
It is.
I love that, Dom. Where can people reach you, mate? Where are you hanging out? Where are you most active?
Everywhere. Just Google my name if you want to find me.
Google
all over
me.
LinkedIn, YouTube. I've got all
LinkedIn,
the social
TikTok.
media stuff.
You know,
I will warn you, once you Google me or click on any of the stuff that we do, our retargeting pixel is going to follow you. So
we love that. That's it. Sell or be sold. Well done, Dom. And thanks so much for being my friend and being on this Lawyer Lending Live today, mate.
Absolute pleasure, mate. Thank you.
Pleasure. If you have any more questions for Dom, please DM him on all the socials. He's obviously everywhere, omnipresent. Thanks for joining us again today. We come out every Wednesday, and we'll be also interviewing Mr. Philippe Doyle-Gray from 8 Wentworth Chambers at 3:15 later today on Law Live. Have a great day, everyone.